Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne. We're going to be talking about the importance of gold here, looking to break out above its inflation adjusted terms to some all-time highs, and also GDX and the GDXJ charts to punch above some lateral resistance that have developed over a couple years for GDX and even longer for GDXJ. We'll even post a couple of those charts in the show notes. Jordan is the editor of the Daily Gold. We'll post a link to his website. Jordan, let's talk about this potential for gold to break out in inflation adjusted terms. We've talked in the last few years about gold breaking out in other currencies. Then it is finally broken out against the US dollar. It pushed all-time highs over the last few months. Now it is this whole inflation adjusted level that we are looking at. It's pretty much right there now. This goes back to a spike in price that we saw back in the 70s. This is going against the CPI, the Consumer Price Index. Jordan, why is this important for gold, more so just in terms of breaking out on price levels to break out in inflation adjusted terms?
Well, quite simply, it's important because the inflation adjusted gold price is the best big picture fundamental indicator for the gold stocks. If you look at the Barron's Gold Mining Index and you go back 100 years or so, with the exception of the 1960s, which is kind of a weird decade, kind of a bit similar to where we are now. But with the exception of that, the shape of gold stock indices going back that far looks very similar to the inflation adjusted gold price. And even if you're looking at the last 10 or 12 years or the last 20 years, I mean, they have a very similar pattern. And in the past, whenever I would see this thing come up, the inflation adjusted gold price, I thought, okay, that doesn't mean anything, like no big deal. Who really cares? Like, why is this meaningful? But then I think a year or two ago, I discovered, looking at the gold stocks and looking at the inflation adjusted gold price, like how closely correlated they were. And it makes a lot of sense because we know that gold stocks, they move based on gold margins. So they move based on the gold price minus costs. And again, in the past, I used to think, well, gold against the CRB. I mean, that the CRB is probably a good marker for prices, and that can help. That can help us with margins. But there were just various points where gold was way too strong against the CRB, and its margins were not that strong. So the inflation-adjusted gold price, if we're taking a 50,000-foot view, it's really the best indicator for the gold stock. So that's why it's so important.
Well, and Jordan, just to that point about looking at gold versus the commodities, in a recent update you sent to subscribers, you also talked about gold versus oil. And when you look at the ratio chart, gold versus WTIC oil, it's interesting to see that gold is also getting ready to break out versus other commodities.
Yeah, it's broken out against both oil and the CRB. I think I put oil in there because we know that oil is a big cost for mining for most mines. It's a smaller cost for underground mines, but it still matters. But so if we're looking at a shorter term, I mean, if we're focused on a year or two or less than a year, gold against oil, that ratio, that's a good marker for gold mining margins. So the fact that gold has broken out there, I believe it's a clear breakout. I think it's at a 3.5 year high and climbing. So that speaks to, I think, kind of in the near term, that mining margins are in good shape, that we're not going to see any cost blowouts or just higher production costs over the coming quarters. For the industry as a whole, I mean, clearly individual companies can have their own problems, but what the chart is telling you, like we're not in 2021 or 2022 anymore, where there was just so much cost pressure for these companies. At the moment, it's coming down. And that's really important because if in the next 6 or 9 or 12 months, if you get gold moving up to, like, let's say 3,000, another $500, like that in the immediate term, most of that money is going to flow down to margins. So this won't be a situation where if gold goes up 500, miners are only going to get $200 or $300 worth of that. They could get, at least in the market sense, I'm not saying it's permanent, but in the market sense, over the next 6 or 9 months, that margin has a chance to really expand significantly if gold moves up here.
So since this is so much focused on margins, if you look to the already producing companies, do you see the ones with low margins right now outperforming the companies already with high margins, or do they all potentially just rise together because everyone's margins are getting better?
Yeah, it's a really good question. I'm not trying to dodge it because I like to give my opinion on anything and everything, gold and mining and markets related. But it's a really tough call because I tend to think there's not too many. I mean, off the top of my head, I don't follow that many that have much lower margins than kind of average. So I would suspect it's definitely possible. But again, with this industry, I mean, you have to look at it on a case-by-case basis. There can be such a range of outcomes that it's really hard to say. It doesn't make me, at this point, really want to change my strategy. I'm not thinking about, well, I could get a lot more leverage with, these higher cost producers or these lower margin producers over here. But, if one of those companies, if I felt they were a really good company and they were just kind of temporarily on the low side of margins and their costs might be able to come down more, then I think that type of company could definitely outperform. But at the same time, if I'm looking at something where they're not that great of a company, their production costs are kind of high, yes, the stock price could definitely move up because their margins are moving up a lot in the short term or medium term. Yes, that stock price could go up a lot, but at this point, it doesn't make me really want to change my strategy.
Well, Jordan, let's dig into the senior and mid-tier producers because that's really what's inside of GDX and GDXJ. Even GDXJ has a lot of the mid-tier producers in it. You put out a note recently to folks that were following the daily gold about some lateral price support levels you're looking at, that if these two ETFs, GDX and GDXJ, can punch above it, it may be significant, noting a larger breakout in the sector.
Yeah, we are really on the cusp of legitimate breakout moves in the mining indices. I mean, we're not talking about, breaking above a long downtrend where a market just breaks above a trend line. I mean, these are real breakouts. You have to look at horizontal levels to identify real breakouts. And so looking at GDX, looking at a weekly bar or weekly candle chart, GDX in weekly terms has only closed above 40 once. And I think the highest close is just below 41. So a weekly close above 41, that would be the highest close in GDX since the end of 2012. So that's nearly a 12-year high that GDX is very, very close to. GDXJ looks a little different. Looking at it, if you get a weekly close in GDXJ, probably at 47, that would be the second highest close in 3 years, other than one close in 2022. That would be, if not for that one close, that would be the highest close in 3 years. And GDXJ has not traded, it's not spent that much time above 47, 48. I mean, there's a little bit of trading above it in 2020, a couple weeks here and there in 21 and 22. But if GDXJ can move above 47, 48, that's a pretty significant breakout in its own right. And in addition to that, I also, in the article, I pointed out that there's this junior gold sub-index, which is a index, I think, within the TSX Venture, which nobody seems to know about. It has 28 companies in it. Average market cap is, I think, 340 million. Median market cap is around 200 million. And if you look at that, that's got a perfect 10, 11-year base that it's coming up on. So that also has the potential for a big breakout. So from now until the end of the year, there's definitely a real chance for not just the bigger juniors, but even the smaller juniors to have a really meaningful breakout.
Hey, finally, this rising tide lifting all the stocks. We have seen a number of stocks do well, and I think a few more are starting to join in. But again, it's that rising tide, getting everything moving. Jordan, when you talk about a breakout then, against these multi-year horizontal levels, what do you look for in a breakout? Obviously, something to just keep running higher, but what confirms to you that you have broken out and that the move is truly going to go higher?
You need to have a very strong close above that level. So for GDX, you'd want to see a strong weekly close above 41, 1 or 2 weeks where you have very strong weekly candles above 41. And at the same time, you would want to see the advanced decline line remain strong. It's very strong right now. You'd want to see gold stocks outperforming gold, probably outperforming the stock market at the same time. That would definitely add a lot of confidence to the breakout move. And, that doesn't mean like when it does break out, all that stuff has to be lining up immediately, that week. I mean, sometimes it can take a couple weeks to get real confirmation. I mean, that's the difficult thing about looking for this confirmation is that it usually only happens after the market has made the breakout move. But those are the things that I would look for. Strong weekly closes, strength in real terms. You got those things with GDX above 41, GDXJ above 48. Then you got yourself a real breakout.
It's so close right now. Some pretty key levels for us to watch on GDX, GDXJ, and hey, maybe that could bring up that whole sector and money could filter down into those juniors. But right now, I think the game clearly has been on being in some of the best large miners as well as the mid tiers. Those companies, there's a lot of companies making money mining gold right now. And hey, that is much better than what we saw in many years past. Jordan, thank you very much for your time. Again, Jordan is the editor of the Daily Gold. Click that link in the show notes to keep up to date with what he is writing to subscribers. Thanks for your time today, Jordan.